Good afternoon. It is time for the midweek update. It's Wednesday, the 17th of August, and this is Neil. I was last with you on Monday, and basically what I had to say was I want to shift from what has been steadfast, hardcore, bullish bias with targets for higher. As of this week, I wanted to shift to neutral, kind of just give this thing a chance to breathe. And so I don't know how this thing could be any more neutral than it is. The weekly open this week was at 77. You can think just round kind of terms, think, 75. But I mean, to the tick, to the print, it was 77. And as we are right now, end of day on the close at Wednesday afternoon, after 3 full days of trading, we're trading 77. It's been a little higher and a little lower. Really, there's not much. Obviously, there's not much to say about that. Now, I was anticipating that today could have been a little more exciting than it was today. Actually, than it was. Reason was there was news, multi-pronged, retail sales, Fed minutes, Fed speak, lots of, plus the VIX expired this morning, the VIX expiration in front of the options expiration this Friday. So, I was looking for more in price kind of movement than we did get today. And honestly, I'll be honest with you, I was looking for it to be to the downside. And so let's talk about that, all right? Now, look, here's the deal. From the high, all-time high to the bottom down there, we were down 24%. Just in June alone, we recovered, July alone, just in July alone, we recovered 0.2% of the losses. All in all, including June lows, this is back basically half back, right? So it was down 24 and now it's down 12 on the year. So we're half back. In addition to that, note that we're at the 200 period moving average, simple moving average on the daily at 43.20. That's 43.20 is the 200 SMA. And so I'll say it this way. This is still bullish until it's not. And we have no clear signs anyway yet that it's not. But it does not mean that you want to go buying it here if you're not already in, right? If you're long hold, right? But if you're not, then do you want to buy it here? No, absolutely not, and just no. I'll tell you where I think you can buy it and have a really good shot at a really good risk reward, but it's definitely not here. Okay, this at the weekly open at the highs of the move, like I said, down 24, recovered 12 at the 200. Give me a break. I mean, on the heels of a 9+%, big uptick just in the last month alone. No, thank you. But there is a place down here, and I believe I can tell you it is really just spot on the money. It is 41.20. Okay, you're gonna know really tight, really quick, really spot on the money, pretty right there, if it's good, because I mean that's a real level. That's balance of this period here, this whatever that sideways consolidation, August 25 through July 25 through August 8th or whatever. It's also the reason we were targeting that on the way up was it was balanced from back here, May 27th or something through June 8th. The 9th was the CPI, the big downswing that broke away from this balance up here. But balance from that May-June is 41.20, and in this last consolidation it's 41.20. So I mean that's the spot, okay? And it needs to hold really, really tight right there. Now, just below that, there is an indicator that we use in the futures trading in our futures room that's written by one of our moderators, and it is fantastic. I mean, it is top notch with really, really good levels that we can target, and we also use for support and resistance as well, but a lot of target and pivots. And that there is a extremely important, absolutely must hold just below this buy level that I'm giving you at 41.20, and it's right there, the low, and look at how important that is. I mean, it's like basically 40.80 like two. Look at, it's the low of this group. It's also the low of this May 27 by 6.8 group. And in order, the place to look at, buying a retracement and holding that 40.80 right there is 41.20. That's the spot. And if it's good, then it's good for a new high, which is, goodness sakes. I mean, at that point, yearly pivot's up here at like 44.05 or something. 44.05 is yearly pivot for this whole year. That's last year's high, low, close, add, divide by 3. And you're wrong just immediately below the spot right there. So that, that makes sense. That's a trade. But, I'm not interested in chasing an additional, long, add long, that kind of stuff up here at these prices for all the reasons I just shared. Okay? And furthermore, what we can know is that if this 41.20 does not hold, and it lets you know that it's not holding. By the way, we'll have plenty of time to get to that. That'll be next week sometime before we even have to talk about that. There's no way in my wildest imagination that that's going to be something we have to deal with before I'm with you early next week. But I'll just go ahead and kind of give you a preview that, if that doesn't hold, and it, i.e. just below it at the 40.80 right there, it lets you know that it's not holding. Well then, okay, that's a quick, paper cut in and out, like, okay, that didn't work. And we can then flip to a higher time frame short bias, where we would have our very first target would be 200 lower at 39.60. So in other words, like the really important levels right in here to me are simply 41.20 and 39.60. 39.60 is another balance print down here, and it's also the 50-period moving average on the simple moving average on the daily. It's that as well. So, look, it's still neutral. I'm neutral up here because these prices are high, but it is still bullish until it's not. And a simple retrace from here back to 41.20 still allows this thing to still be bullish until it's not, but that's still bullish, with a really good risk reward profile. I mean, the target would be like up at 44, and the risk is a couple of, just like I just said, I mean, it's a few points below, right? So that's the kind of stuff we're looking for. What we're not looking for is to try to find something every single minute of every day just because price is here and we feel like we have to find something to do. Well, good luck with that. I mean, we opened 2 days ago at 8:30 in the morning. Well, no, it was worse than that. It was Sunday night. We opened Sunday night at 5 o'clock at this price, where we're trading right now Wednesday afternoon, after a full day, of trading all day Wednesday, with Fed minutes and Fed speak times 2 and retail sales and so patience, okay? And OPEX Friday, I mean, it's just, that's all I got. Hope it helps. Just patience. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me